I know some of you are going to look at that and ask, what did you frame that trade on? Instead of going into your charts and finding what it is that's available that I could have used on that. So I'm not going to hold your hand the entire process. It's important for you to see there's gaps in my teachings, so there are opportunities for you to go in and investigate the information yourself. If you're not going into your own charts, seeing whatever I'm executing on, and you're not doing the legwork, if you will, in your own charts, annotating, journaling, back testing, looking for other PD arrays, because I'm not trying to force you into the model of just simply using a fair value gap. But you need to understand that we may have visibility. I have visibility. You may have visibility, may not have visibility because your experience factor is too low right now, but you will get it over time. Meaning that even though that the conditions were met, that it's a Monday, no employment data, I'm sorry, no economic data coming out at 8:30, nothing after 9:30, all the way through to 10:30. So there was nothing to speak of in terms of uh, increasing the volatility by having these smoke screens that the news calendar uses. They don't cause the market to go up and down, but the interventions that come in around these times, they use them as a smokescreen. So that way you think, and everybody else talks about it online, oh, that's so-and-so report, or we had real bad economic news come out today, or bad data came out, or positive data come out. And none of that's true. None of that is absolutely, has no bearing on why the market's going up and down. But they're perfectly little excuses for when the market does something that's opposed to what those reports suggest, meaning that if the report's bullish or bearish and the market does the opposite, then they quickly come out and say, well, the market priced in that stuff. But you didn't say that. Nobody out there is saying that beforehand. So it's quickly forgotten because the market's doing something else. So you're never really paying attention to that. It's kind of much like a magician's sleight of hand. You're really never seeing the dirty hand doing the work because you're always being distracted by the red herring. So I told you we would be focusing on a draw. My interest was the draw on the clustered previous week, which is here. And if you look at the recording, you'll see that it says current in the recording because I had to hurry up and toggle over because I knew as soon as I started to record the trade going into the target, I was going to be met with 100 different comments saying, what did you use to get into that? I thought we're supposed to be trading model 2022. I thought we're supposed to be trading after 10 o'clock. I'm not limiting myself to that. I taught those models. That doesn't mean I have to stick to those models. I'm teaching that to my students and specifically to my kids. Your job is to find one that matches your personality. Just because I taught one model doesn't mean I'm locking myself into just only that. I'm not a one-trick pony. I can do lots of other things. And I do that to show you that there is no limit to formulating and fashioning a model that is going to be uniquely equipped to agree, not be in contention or in competition against your personality. And many people, they latch on to people as educators and teachers or whatnot. And I'm in that same category too, because I may be talking and promoting a specific model at a time when you find me. And then you discovered I've taught other models before. But because whatever model I'm teaching at the time, that's the good one. That's the only one that seems to work. Because if it was good enough for the silver bullet to never need to have another model mentioned after it, then why talk about another model? And that's myopic. It's just focusing on one characteristic of the marketplace where you can capitalize on a time-based model. It's very specific. It's rule-based. That means it checks a lot of boxes for brand new students to go in and force some measure of accountability and responsibility. And most models that people are promoting through mentorships or whatever, they don't have rules that hold you accountable because you're always hunting for a new setup and you don't really know when that setup's going to form. You can't just say, well, here's the ICT kill zone. And somewhere in these hours, there's going to be a setup. Of course, that's going to be a setup. But when we narrow it down to, okay, here's a setup that's going to form between 10 o'clock in the morning and 11 o'clock in the morning. And if it doesn't form, that's your model. If it didn't form, you didn't get a trade, turn the charts off. And then you form, in fact, fashion your responsibility, your accountability goes through the roof, and you build discipline by that. So I'm reminding you that we talked about this, I did, in the post this morning. So the draw was here, but I said in that recording, you'll see it says current in the purple one. This is last week's new week opening gap. And I did this to kind of like have a lot less things on the chart because I'm teaching Caleb to focus on clusterings of new week opening gaps or clusterings of new day opening gaps. So if we're opening up here at 9:30 or so, my job as a trader is already done. Like I don't care at that time because I'm looking for something that's going to be useful before the opening bell because it's a Monday, because it's the last, um, I'm sorry, not the last, it's the Monday without a impression of confusion by the economic counter having a high impact or medium impact news driver at 8:30 or after 9:30 opening bell. So there's a void of any kind of intervention or invitation for intervention. Not that it can't be, it's just the the probabilities of that occurring with the economic counter being void of anything, it's less likely. So they're going to move the market cleanly before everybody else is part of it. That means everybody's sitting around like kumbaya waiting for the 9:30 opening bell. Everybody else is herding to that watering hole at 9:30, but the professionals are going in early. We're going in and we get ours early because we know that there's going to be a whole lot more predatory price action after 9:30. Why? Because it's a Monday, because there's an absence of medium impact or high impact news drivers.